പട്ടികാണികൾ പണിയുണ്ട്. Kelihatan naik nggak?
Oh, sini jauh ya, begini. Terus kata lah. Betul kan? Artinya tadi masih sih. Aku potong gitu. Boleh, boleh.
हॅलो. हॅलो. How you doing? Hello? Hello? Hello, everyone. Hello. Hello. Am I audible? Hello.
Yes, sir.
Hmm. Shall we take class?
Yes, sir.
Okay. Minus you, nobody joined here, huh? So, what to do?
सर ये तो क्या ही बताऊं मैं.
ठीक है. तो क्लास स्टार्ट करें, हाँ?
ओके सर.
Okay. So, we shall see this income tax. We shall see this income tax. So, what is, first of all, we shall see what is tax. First of all, we have to understand what is tax. So, tax is a compulsory extraction from the individual by the central government. From the individual by the central government. And this is imposed on the individual. This tax is imposed on the individual. This is not a voluntary payment. This is not a voluntary payment. This is neither a voluntary payment nor a donation. This is only imposed on the individual as tax. So tax may be of various type. It may be income tax, it may be wealth tax, it may be sales tax, it may be expenditure tax, it may be service tax, or it may be import tax, it may be export tax, it may be production tax. All these things come under this. So you see, this income tax this income tax this is income tax is tax as per the constitution. This is imposed by the income tax is imposed by the central government. Income tax is imposed by the central government, and this is otherwise known as direct tax because the person who is taxed, he is liable to pay. The person who will be taxed, the person on whom tax is imposed, he is personally liable to pay the tax, and you have to pay the tax to you have to pay the tax on your income annually. So you see, income tax, how we can pay income tax is charged on the income of the income tax is imposed on the income of the financial year. Income is charged on the income of the financial year which is payable in the previous year by the assessee. So you have to pay the income tax annually. So this income tax is charged on your income, on your annual income. So this income tax is payable on the person concerned. The person concerned, he will have to pay the tax. Now the tax is payable on the income. This tax is payable on the income. This is a salary income. This may be a salary income. This may be income from house property. This may be income from business profession, or this may be income from capital gains, or whatever case may be. Whatever case may be. Now we shall see income tax is payable on the in the assessment year or in the previous year. So you see, our say financial year, say a person earned a income of from say 1st April 2019 to 31st March 2020. 31st March 2020. So what happens here now? The assessee, the person, he has earned income from 1st April 2019 to 31st March 2020. This the past, so your financial year is 1st April to 31st March, and your assessment year is also 1st April to 31st. Assessment year ends on 1st, 31st March. So assessment year for financial year 2019 to 2020, our assessment year is 2020-21. Assessment year is 2020-21. So whatever income the person earn in the financial year 2019-20, he has to pay tax in the assessment year 2020-21. Is it clear? The assessee will, whatever income is earned by the person concerned in the financial year, that is 2019-20, he will have to pay tax in the assessment year 2020-21. 2020-21, and he has to pay tax in the prescribed rate. The individual, he has to pay tax on the prescribed rate. In the person concerned means he may be an individual, he may be an HUA, Hindu Undivided Family, it may be a company, it may be a local authority or assessment or association of person, whatever may be. So, and this tax is administered by the central government, and this income tax rule 1961 is applicable throughout India, including your Jammu and Kashmir, including our Jammu and Kashmir. So, this income tax was introduced in India by the British company, by the East India Company, after the first Sepoy Mutiny in 1957. In 1957, there was Sepoy Mutiny. After 1857, you follow my point? After the Sepoy Mutiny of 1857, that is your English people, that is East India Company, they started the income tax, which continues till 1886. And in 1860 to 1886, that was on a preliminary basis, and after that the income tax went on and we have to pay tax. We have to pay tax. Now we shall see the agricultural income. So if assessee, who is assessee? Assessee means the person whose income is taxable. The assessee means the person who has to pay tax. Assessee is the person who has to pay tax. You follow? You follow this or not?
Yes,
Little?
sir. Yes, sir.
Okay. Whenever you will feel problem, you can ask me.
Okay.
So now we shall see agricultural income. So income, the assessee will have to pay tax on the income, and the income there must be regular source of income. Income may be from salary, income may be business profession, income may be from capital gain or income, whatever the income, or income from the house property. So income may be from agriculture income, but the income from agriculture is totally tax free. Income from agriculture is totally tax free. Now, how we can know that this is agricultural income? How we can know that is agriculture? What will include agricultural income? Agriculture income means if you earn something from the sale of the agricultural product, or if you receive some rent from that agricultural land, rent from the agricultural land. Okay, so now shall see the assessee. Assessee is the every person from whom proceedings can be made. Assessee is every person. Now we shall see what is assessee. Assessee means every person who is assessed, or who against whom procedures can be made by the central government. Okay, so assessee may be of three different categories. Assessee may be of three different categories. First one is ordinary assessee. First one is the ordinary assessee. Second one is representative assessee. Second one is the representative assessee. And third one is assessee in default. Assessee in default. So let us discuss one by one. Let us discuss one by one. So what do you mean by ordinary assessee? What do you mean by ordinary assessee? Ordinary assessee is the person against whom proceedings can be taken. Against whom proceedings can be taken. So whether he has paid tax or he may not have paid tax. Uh, and if a person, if he has sustained any loss, if a person has sustained any loss in any assessment year, will also have to pay the tax. He has to file the tax. He have to file the return. After filing of the return, proceedings will be made. After filing of the return, proceedings will be made by the central government. Then your representative assessee or deemed assessee. So, who are the representative assessee or deemed assessee? Who are the representative assessee or the deemed assessee? So agents of a non-resident, agent of a non-resident Indian, he is a representative associate of that non-resident, of that non-resident. You follow? So representative means suppose a person dies. Suppose a person dies after writing the will. Suppose a person dies after writing a will. In that case, when the will be executed by the person, by the agent, he is not the person by whom the will is executed is known as deemed assessee or representative assessee. Hmm? Okay.
Yes, sir.
Then, if a person is lunatic or a minor, if so, a minor can have some income. A minor can have some income. So, if a minor has something, or if a lunatic person has something, so income tax is payable by his guardian. So, minor cannot pay the income tax. Lunatic person cannot pay the income tax. So, if there is income of a minor or income of a lunatic person, then income tax is payable by his guardian. Income tax is payable by his guardian, and he is known as representative. He is known as representative assessee or deemed assessee. A deemed assessee. Again, now we shall see assessee in default. Assessee in default. So, assessee in default means if any assessee he fails to pay, then the person who will have to be responsible, who will have to pay the tax on his behalf is known as assessee in behalf. Suppose I am giving one example. Suppose so DDO, the Drawing and Disbursement Authority. So whenever a person he employs some employees, if a person he employs some employees, in that case he the employer will have to pay salary to the employee, and that salary is the income of the employee. The employee he must have to pay tax, and whensoever the employer pays the tax, the employer must have to deduct the tax. He must have to deduct that is TDS tax. TDX, tax deducted at source. That is known as tax deducted at source. The DDO at the time of at the time of paying the salary, he must have to deduct some amount of tax from the employee's salary, and so whensoever the employer he deducts some tax from the salary, he is known as assessee in default. He is known as assessee in default. You follow my point? He is known as assessee in default. Okay, he is known
Yes,
as
sir.
assessee in default. Okay, now we shall see that average rate. Average rate means, so what do you mean by average rate? Average means so the assessee he will have to pay as per the rate prescribed by the central government. The assessee, suppose a person earn something, so salary, and if the person after total deduction, if his salary is over and above 2,50,000, if his taxable income is over and above 2,50,000, then he will have to pay tax at the prescribed rate. So he will have, so if over and above rupees 2,50,000, if the income of the assessee is over and above 2,50,000, then he will have to pay tax at the prescribed rate. On the tax, he will have to pay, that is your surcharge as the education tax, health tax, that is known as surcharge. On the total tax, you will have to pay 4% as surcharge. So total tax including surcharge divided by total income into 100 is known as average rate. That is known as your average rate. So what is average rate? Average rate means total tax payable, including such as by total income into 100, whatever rate will come, that is known as average rate. And now we shall see maximum marginal rate, MMR. Maximum marginal rate, that is known as MMR. So what is MMR? MMR is the highest rate that the he has to pay. MMR is the highest rate that employee has to pay. That he has to pay. Okay. Now we shall see block of asset. What do we mean by block of asset? Block of asset means the asset which falls within one group. Means the asset falling on one group of depreciation. If so, the same category of asset falling on the same rate of depreciation is known as block of asset. Tangible asset being building, machinery, plant and furniture. Intangible asset known as patents, copyright, trademarks, license, etc., etc. So this same block of asset, block of asset means we have to keep the asset. We have to keep the asset which have the same rate of depreciation in one block. We can keep the asset in one block having same rate of depreciation. Okay. Then your business trust. Business trust means this trust registered under infrastructure investment or real estate investment tax. Okay. Then your charitable purpose. Charitable purpose means relief for poor, education, medical relief, yoga relief, all these things. Okay. So let us see. So now we see what do we mean? What do we mean by income? What do we mean by income? Income means there must be definite source of income. Income must have some definite source of income. Income must have some definite source of income. So income can be compared with fruit. Income can be compared with some fruits. So whensoever a tree is there, suppose a mango tree is there. So yearly, in each and every year, the mango tree will give you some mango fruits. Likewise, your income means throughout the year, the assessee or the person must earn something, and that income must come from outside. Income must come from outside. If your father gives you 1000 rupees, that is not your income. If your father gives you 50,000 rupees, or even if your father gives you 1 lakh rupees, that is not your income. If you earn something, so income must come from outside. If you earn something from business, if you earn something as commission, if you earn something as rent, if you earn something from outside, that is known as income. So income must come from outside. Income must come from outside. Okay. So income, there is no difference between the legal income and illegal income. The assessee must have to pay income tax on legal income as well as illegal income. So income tax never differentiate between legal income and illegal income. The assessee will have to pay tax on legal income as well as illegal income. Okay. So now we see diversion of income versus application of income. Application of income. So diversion means some income is diverted towards some person due to legal obligation. Diversion means income is diverted due to some legal obligation, whereas application means receiving the income and spending in some other way. Then income may be temporary income or it may be permanent income. Then income may be definite income, it may be permanent income, it may be temporary income, and that is there may be dispute regarding the title. There may be dispute regarding the title of the income, whatever may be dispute regarding the title of the income, but the recipient of that particular income will have to pay tax. Though there is dispute regarding the title of the income, still then the recipient must have to pay tax on the income. Suppose, for example, suppose there is a house property. There is a house property, and there may be any dispute among two persons regarding the title, regarding the ownership of that property. But the central government did not bother regarding the dispute in the title. Central government tells that you have to pay tax. The income tax will be paid by the person whosoever receives the income. Whosoever receives the income, and income must be in money or money's worth. Income must be in money or money's worth. Okay, income must be money and money's worth, and income that is must be of an assessee. Income may be of an assessee. Assessee may be any person, maybe individual, maybe company, maybe HUF, Hindu Undivided Family, maybe local authority, maybe whatever it may be. Suppose a priest can also be a priest can be also be a assessee. Priest can be an assessee. Suppose a devotee, if a devotee pays something to the priest, so whatever income is earned by the priest from the devotee, that is taxable in the hands of the priest. In the hands of the priest. So again, gift. Suppose so you may pay some. You may give some gift. You may present some gift to your friends, to your son, to your brother, to your daughter, whatever the case may be. So that is the that our gift may be in monetary gift, or gift may be of monetary gift, gift may be of immovable property, or gift may be of any other case. So if a person gives some gift, if a person gives some gift exceeding 50,000, then that is fully taxable. That is fully income in that previous year. So if a person he present the gift, he present some money more than 50,000 to any person, then the person whosoever will receive that gift is the income of that particular person if he receives the gift without any consideration. Without any consideration. Then gift in case of our immovable property. Gift in case of immovable property. So this is also taxable. This is also taxable. Then there are different heads of income. There are different heads of income. What are the different heads of income? Income may be from salary. Income may be from salary. Income may be from house property. Income may be from profits and gains from the business. Income may be from the capital gains. Capital gains may be long-term capital gains, may be short-term capital gains. Then income from other sources. Income from other sources. So there are different types of income. There are different types of income. So we have to club up the income from the various sources. We have to club up the income from the various sources, means income from salary, income from house property, income from business professional gains, income from capital gains, and income from other sources. You have to club up the total income. You have to club up the total income. Out of the income, there are some deduction. There are some deduction. So deduction for it, I am telling just about regarding the individual assessee. I am telling you about the individual assessee. In the regarding the individual assessee can pay tax as per the old regime and as per the new regime. In the new regime, there is no tax relief, there is no deduction. There is no deduction. But in case if a person he is willing to, if a person he opts to pay tax in the old regime, then he will get some tax relief, he will get some tax deduction. That is if a person, whensoever a person relieves salary, I am telling about salary. If a person receives some salary, he out of the salary he will have to pay some professional tax. That professional tax is fully deductible. That professional tax is fully deductible from the total income from salary in the old regime, though not in the new regime. So again, under section 80C, he will get a deduction of 1,50,000. He will get deduction of 50,000 as standard deduction. So there are a number of deductions. There are a number of deductions from the salary if the assessee wants to pay in the old regime. If he wants to pay in the new regime, he will get no tax deduction. So again, from house property, whatever house, whatever income you are, whatever the income the assessee earn, he will get one third as standard deduction from the income of the house property. Okay, from the income of the house property. So in this way, again, there are some deduction in your capital gain, in business profession, in other sources. Everywhere there is some tax relief is there. Central government provides some tax relief, and after giving all that, just you just you just club up the all the incomes. You just club up all the five. You just club up the all the income from the different five types of groups. That is income from salary, income from house property, income from business profession gains, income from capital gains, and income from other sources. From all these five heads, you just club up the all the incomes. That is known as your gross income. That is known as your gross income. So out of the gross total income, after aggregating the gross total income, after the gross total income, you may take some relief from the gross total income. So after taking the relief, so your total income means gross total income minus deduction from 80C to 80U minus deduction. So whensoever you club up the all the income, whensoever you club up the all the income from different five heads of income, that is known as your gross total income. So out of the gross total income, you just deduct the different deduction. You just deduct the different deductions. So gross total income minus deduction under section 80C to 80U comes your total income, total income, and total income is rounded up to the next 10 rupees. Total income is rounded up to next 10 rupees. Suppose a person earns in a particular financial year, say rupees 1,25,634. His taxable income will be, his total income will be 1,25,630. This is rounded up to 630. So 634 is rounded to 630 because the 34 is less than 5. So if last digit is 5 or more than 5, you just add 10, you just go to the next digit, and if it is less than 5, you just subtract that. Okay. Then tax due is also rounded up to the rupees 10. Suppose tax payable by an assessee is known as, if it comes to say rupees 2,872. Out of 2,872 means he has to pay tax as 2,870. So like you see, just whensoever the last digit is 5 or less than 5, 5 or less than 5, if it is less than 5, then you just leave it, and if it is 5 or more than 5, then you have to go to your next digit. Then your So what about how we can pay tax? So out of the total income, out of the total income is the taxable income. Total income means taxable income. Out of the taxable income, now if you want to take tax relief, up to 2,50,000 is tax free. Out of your total income is taxable income. Out of total taxable income, rupees 2,50,000 is totally tax free. Totally tax free. 2,50,000 is tax free, and then we'll go to different tax rates. You have to follow different tax rate. Now, I am telling regarding your assessment year, and your financial year. So income is earned in the financial year. Income is earned in the financial year. You follow, Ritu?
Yes, sir.
Have you any problem? Not.
No, sir.
Okay. So so the income is earned by the assessee in a particular financial year. Income is earned. So your financial year begins on the 1st April and ends in 31st March. Your financial year begins from 1st April and ends on 31st March. Likewise, your assessment year also begins on 1st April and ends on 31st March. So you add the what is financial year? Financial year is the year in which income is earned. Financial year is the year in which income is earned. Suppose your financial year starts from 1st April. Suppose the financial year of an assessee is say 1st April 2019 to 31st March 2020. If he earns income from 1st April 2019 to 31st March 2020, that is known as the income of that particular assessee in that financial year. And at the end of the financial year, that is to 31st March 2020, he has to pay tax on the income and in that particular financial year, that is 2019-20, tax on the on that income of that 2019 and 20. So after 31st March 2020, he will pay the tax. So he will pay tax from 1st April 2020 to 31st March 2021. So for him, the assessment year, so for financial year 2019-20, assessment year is 2020-21. So assessment year is the year in which tax is payable. Assessment year is the year in which tax is payable. Tax is payable. So for newly set up business, suppose a newly set up business, a person start a business in say August 2019. Set on 31st August 2019. His assessment year is also 1920. So though he has not worked for the whole year, his business has not he has not earned for his financial year, does not does not fall within that 12 months. Still then the part of 12 months may be the financial year. So his financial year starts from 31st April to 31st March. So if a person starts a new business in the part of a year, that will be his assessment, that will be his financial year. Okay.
Okay, sir.
Hmm. It will do some problem. Okay. Now you see how the total income is computed. Total income is computed. So in salary, what happens that whatever total salary you earn, that is your basic salary, then your DA, and if any bonus is given to you, any perquisite is given to you, any fringe benefit is given to you, everything will be added with the salary, and from that total income you will get some deduction, that is known as standard deduction, then professional tax, then your entertainment tax that will be deducted. Then from income of the house property. From income of the house property, you have to find out the annual rental value. You have to find out the annual rental value. From the annual rental value, you have to deduct the municipality taxes. That is known as net annual value. Then profits and gains from the business, all these things we will discuss one by one from different heads. One by one from different heads. Okay. Acha. Now we shall see. Okay, time is over. Time is over. Your class was from 11 to 12. Your class was from 11 to 12. Now it is more than 12. So class is completed. Till then, let us discuss. If will have some. So let us discuss. Have you any problem?
No, sir.
Okay. Shall we discuss the residential status of the RCC?
Okay, sir.
Shall we discuss?
No, sir.
Okay. Huh?
No, sir. Everything is clear.
Means everything is clear. No, I am asking you whether we shall discuss the residential status of the RCC or not. Just tell me.
Okay, sir. Okay. We shall
We
discuss.
shall discuss.
Yes, sir.
Okay. Okay, so now let us see the residential status. So in case of residential status, assessee may be ordinary resident and non-resident. Assessee may be ordinary resident, may be not ordinary resident, may be non-resident, may be non-resident. Okay, may be non-resident. Assessee may be resident, may be non-resident, may be not ordinary resident. So these three type of assessee are there. These three types of assessee are there. Okay, this is more than 12. Later we shall discuss. Otherwise, we shall discuss it in the next class. Okay,
Okay,
we
sir.
shall discuss it next class.
Okay,
Okay.
sir. So may I leave the meeting?
Okay. Okay. Let us close it. Huh?
Okay.